You're locked in to the Cash Flow Show with Dave and Nate, the best place to navigate how to achieve capital appreciation with commercial acquisitions. Here's your hosts, Dave SEYMOUR and Nathan Amaral.
And we're here.
Hey.
Another week. What's up, Mr. SEYMOUR? Look at us.
How are you, my brother?
You're
Look
always
at us.
so sharp, though. Look, I always got the beard going on, and
Yeah, that's because you got that deep, like Portuguese, European,
that
olive
what it is?
skin, dusky
Is that-
sexiness going on. That's
is
why.
that what it is? Oh, by the way, congratulations! I didn't congratulate you last week on
What?
on Brexit.
I tell you, those poor Europeans, they're I don't know what's going to happen to them. I've been talking a lot to some British investors recently,
Oh, really?
some capital brokers over there. They've got a lot of hoops to jump through like we do, but I don't know that everybody's feeling kumbaya in the old UK. You know what I mean?
It's
The British Empire is slowly going down the poop chute for sure. Oh my
the
God.
poop shoot.
Yeah, the poop chute. You can say it like that and it's classy. Like you
You're
can
right.
actually say, poopy words like shite. If you
Oh,
use an
yeah,
English
that's
accent,
true.
you
We
can
won't.
get away
Yeah,
with it.
if we say shite,
Yeah.
then we won't get flagged by the algorithms. That's so true. Shite.
Right.
Yeah.
Right,
That should be our new thing.
Like poopy.
Oh, like
It's
poopy.
poopy.
It's
Yeah,
so poopy.
It's
But
so poopy.
I
I
will-
don't know what's going on in
I
Europe,
will
man.
say this,
It's
though.
tough.
I will say this. There is a new
Yeah.
trade deal. The new trade deal that's coming, I think, in my opinion, there's a trade deal between Europe, Asia, and the UK. I think this trade deal, and I don't know the exact name of it, by the way. I'll get that for next time. But I think that trade deal is going to be revolutionary. I really do. I think EU needs a good shot. Let's use the word shot of capitalism.
Right in the buttocks.
Right
Yeah.
in-
You
Yeah.
know what's crazy, man, and I don't want to go off on too much of a political tangent with it, Nate Dogg.
Sure.
But, if you think about it, the Europe and its borders are kind of like melting away, and that was a big part of the Brexit stuff as well. Kind of
Right.
like the Trumpster did with border control and
Yeah.
hate somebody who doesn't look like you and all of that craziness. And Europe has absolutely ended up. And look, I'm not speaking from an expert opinion. I'm just speaking
Sure.
from an opinion of a guy who catches a little bit of news.
Sure.
Not a lot. Otherwise, a lot of news will depress the crap out of you. So
That's
I
true.
only watch a little bit of news. But
That's true.
it's almost like it is one big economy now in Europe. And think about what that could do to capital and goods and services if China partners up with China, Japan partners up with Europe,
Right.
and if they let little old England in because they feel bad for them, and God bless them. But what a powerhouse that ends up being, right?
Yeah.
You think of it as one economy. So
Yeah.
that stuff's interesting.
I think it's needed. I mean, really, the only powerhouse, the largest powerhouse in the EU right now is Germany. And I really think this can help. I think this new trade deal that's going to go into effect, and there's multiple phases of it, but I think we're going to see after COVID resolutions, I think we're going to see some real growth here, and I think it'd be great. I think it's needed. It's too long being closed off from the world, I think.
Yeah, we shall see. You've got macro and microeconomics.
Exactly.
You know what I mean? I like to focus. That's the
Ficus.
tree in the corner.
Yeah,
I meant
it's
focus.
It's a
ficus.
ficus.
Ficus. Somebody clean that ficus. What was up with that? Remember when houses all had the fake ficus tree in the corner of the room with the Christmas tree lights on it, and it was like a design feature? I'm too
Wait,
old. All right, forget it.
What?
Anyway, what? Nothing. Forget it.
I never
I'm tired.
even.
My
All
brain
right,
goes
all
on a
right.
little walk. Fridays are always crazy for me. You know what I mean? It's like
What's
I've been
what's your
beating the
favorite
bushes
part?
all week.
Yeah, I was gonna say, what's your favorite part about Fridays?
This.
Okay.
I get to just like, yeah,
Shoot
like
the shit.
I just
Shoot the
shite.
Shite.
Shoot the shite. It's a chance to see you, and you always pep me up no matter what's going on.
Hey.
But I get to have some off the cuff, intelligent conversations.
Yeah.
Share what we're doing in the real estate world.
Yeah.
And I don't know, man. It's just a good half hour of the day. I look forward to it. So I
That's
appreciate
true.
you. Thank
It's
you.
a good time. Yeah, thanks, bud. I agree. I mean, this week has been a very unique one. A lot of conversations, unique things that happened. For the first time in my real estate career, I got an appraisal You might laugh at this one. 1 year ago, I got an appraisal done, and it was at X, right? A high X. And then I got a new appraisal done 1 year later while the market and the economy is going up, and the evaluation comes in over $1 million lower than the previous year. How do you make sense of that one? God, what?
You obviously didn't pay the appraiser enough money.
You gotta juice it.
I'm joking. No, you can't do that.
You gotta juice the appraiser. Oh man, but it's after a week of back and forth and all kinds of crazy stuff. It's always a good time to. This is a good way to ease into the weekend and good opportunities that are bubbling everywhere.
You thought you were pulling a couple of $100,000 of equity out of the property.
Oh my gosh! What? Say it again.
The bank goes nope.
Oh, the bank goes nope. Yeah, exactly.
Nope.
Exactly.
Nope.
Oh my goodness. Interesting.
I'm working with an investor right now. A guy by the name of Craig Hansen was pitching for the Red Sox a few years ago.
Yeah.
And he's got a nice little healthy portfolio in Connecticut.
Okay.
And a lot of capital is trapped in there because he did like a lot of people do, and I'm sure he wouldn't mind me telling this. Use your own money. It's always the safest way to go. Blah blah blah.
Right. Stay in control.
Not a lot of people understand the power of leverage as we do. I always like to use OPM, other people's money, the banks, investors, etc.
Right.
But anyway, he's got all this capital tied up in these properties, and those appraisals aren't where he hoped they would be. You know.
Yeah.
They're just not right there. He's good. I mean, I put him with a really good, aggressive guy who can maybe, work some numbers. He brokers some good mortgages and stuff. But you're not alone, Nathan.
I know.
You're not alone.
Jeez.
Some investors are beginning to hurt a little on that.
It was
sure.
It was a shocker for sure. But anyway, you got to just.
What
That's
do you want to do? Do you want to do the thing? We got to do the thing. It's part of our routine.
I can do the thing.
Yes, let's go. Do that thing.
Welcome everyone to the Cash Flow Show. We are your hosts, Dave Seymour and Nathan Amaral, and this is the place. The only place I think where you can learn about commercial acquisitions that can help you build your portfolio. So if you've been mixing around or maybe being passive in the real estate market, in the stock market, or in your IRA, and you want to earn more money out of your IRA, you want your money to really go to work for you, this is the place you can learn about that and hear about opportunities that we have for you today. If you're new here, let us know in the comments below. Say hello, or if you have any questions along the way, throw them in the comments and we'll get them answered for you. That's the thing.
Yeah, we will. We'll answer any questions. Bring them on.
Any questions you have.
Answering questions all week.
Can
I do a quick shameless plug?
Let's do it.
This is very important to me. I'm just quickly trying to find it. Where is it? Right here. On January the 23rd.
All right.
January the 23rd, I have been asked to MC a virtual event.
Oh, nice.
The name of the folks that I'm aligned with are called Employment Options Inc. They are a company that supplies services in the mental health community.
Okay.
So addiction, challenges around anything that's mental health oriented. And we're going to be doing an event on January the 28th. The link, if you could plug this link somewhere, it would be awesome for them to register for the live event. I'll be emceeing the whole thing, so you're going to have to deal with Silly Dave while you're there. Right. But it's a really great evening. The link is Employment Options. Now my English accent gets very precise, so you don't misspell it.
Employment options. Yes.
.org. / gala GALA.
Okay, gala.
So I'm letting you in on a little secret.
All right, tell us.
There will be some really cool gifts there that they will be raffling off. We are raising money to support the mental health community.
Okay.
Look, dude, it's personal to me on a serious note. January 25th. Are you ready for this one?
I'm ready.
31 years sober. January 25th this year.
That is fantastic. That really is like, I mean, that. How do you do it?
Yeah.
How do you do it during the hard times?
One day at a time, baby. Having a support system, employment options, guys and girls that I got sober with, we help each other. No magnificent journey is ever taken alone. You know what I mean? So
that's true.
be there. And I will be donating part of my collection of New England Patriots signed memorabilia.
Whoa.
I'll be donating one of Gronk's shoes.
I've seen that memorabilia. Holy smokes.
Yeah, it's a nice little piece. I haven't even told the guys at Employment Options that I'm doing that yet. So I'll be donating that piece. It's in a nice little presentation case. But come join us. Enjoy the story. There's some testimonials from people that have been helped and how it impacted their lives. It's just a good night. Some positivity during some of the sadness that we're experiencing. So thanks for throwing that out there, Nate. I appreciate you, man. Thank you.
No, that's great.
Yeah.
Awesome.
Yeah.
That's good. Where's it being held, just out of curiosity? Oh, it's a virtual event. Virtual. I'm sorry. Everybody should be involved. It doesn't matter where you are.
That's right. You got no excuses. You can't say, I'm not going because of COVID.
Yeah.
Show up. Don't be a donkey. Participate. I'll say it one more time. Don't be a donkey. If you don't show up, you're a donkey. Participate. All you got to do is press a link and listen in. That's all you got to do. All right? There, I said it.
Oh, goodness. Speaking of donkey, the market is being a donkey these days. I mean, I think a lot of people, we're seeing, I got a few phone calls this week. People saying, I'm moving my money out of the market, right? They're seeing a lot of, uncertainty. We got all red going on in the stock market. Some of the big analysts are saying, look out, we got a big crash coming. I mean, there's a lot of uncertainty going on in the market in regards to stocks, bonds, mutual funds, and all that. And people are looking for a place, to move their wealth long term. Something that they want to build and make sure it's secure. So, Dave, for a lot of the people who are new this year, we got a lot of new followers this year in our show. There's a lot of places to be in the United States, right? There's a lot of places to invest. Where would the fund where does the fund typically look for secure properties for this long-term type of investing?
Yeah, look, man, it's I had that question today. I was on a call with a young Canadian investor who he himself wanted to, buy some assets. He wasn't so much looking on the passive side. He was looking kind of like for some consulting. Mm-hmm. I've started doing more consulting now than I've ever done. But anyway, he was in the Atlanta market, and I said, the Atlanta market's great. And then he said exactly what you just asked me. He said, where are you and why are you there? Well, we're in Florida. We're in the Gulf Coast region of Florida. Okay. And here's the truth of the matter. We've got a track record of over 25 years in Florida, and it makes sense, right? When you invest passively as an accredited investor in large commercial assets, either in a blind fund like we run, or some of our single syndicated deals that we're now bringing to the investor pool. When you invest in those assets, you don't think of it as, and this is going to sound so contrarian, Nathan. Right. You're not investing in real estate. You're investing in me. You're investing in Walter's acquisitions team. You're investing in Eric's systems and operations and processes that we put in place to be proficient. Because the sticks and bricks and the real estate, that's a yes/no answer. That's a yes/no equation. Yes, that's a damn good deal. I'm going to do it. Or no, I'm rolling the dice. So we do it in Florida. We do it in Florida. The deals that we're seeing, the deals that we're underwriting, the deals that we're buying. I was on a partner call this morning, and Walter talked about an asset that we're potentially looking at. There's a few challenges with it, and I'm like, man, I wish we could just get over that hurdle so we could get that particular asset. And he's funny. He always calms me down. He says, relax. Walter's like the calming influence when David starts going. Oh yeah, he's great. He says to me, relax, reel it back in a little bit. I'm like, no, I'm going to solve that problem now. He goes, you don't have to solve the problem. I go, why? He goes, because this is just one of the incredible opportunities that we have available to us.
Oh, that's awesome.
So, we're in Florida because we're established, because we can execute, because we can, we're incredibly bullish on the returns that we target to our investors in that market. Look, if it dries up, and our business model changes because we already
Relocate.
started on fund 2,
Yeah.
then maybe I'll look at bigger deals in different markets.
Yeah.
But the team is what you really invest in, and it's established in Florida. Plus, Florida is the perfect place anyway.
That's a good. Any news about you relocating, by the way? Is that coming up or no?
Oh, dude, you want to hear a funny story?
I
I'm
do.
at dinner last night at dinner.
Yeah.
Listen to me, like I go out to dinner. I'm out at dinner last night with Mary Beth and the boys, which meant I was at my kitchen table. We were at dinner last night, and we were talking about COVID, right? We were talking about how, how different it's perceived, and I'm not pleased. If anybody's listening to me, COVID is horrendous. It's horrific. It needs to be eradicated fast.
Yeah.
But people's tolerance for COVID and its influences are different in different parts of the country. Yeah. Jefferson was all upset that he couldn't sing in school even though he had a mask on in music. Like the music teacher wouldn't let him sing a song because they were wearing masks, and they couldn't play the xylophone unless there was plastic wrap all over the xylophone to make sure that there was no germs on the xylophone. The only place we can sing, Dad, is in the playground, 6 feet apart with a mask on. And I'm like, dude, I get it. I said, you know what's funny? I was talking to an investor in Florida, and he said, COVID schmovid. Down here, they're like, wear a mask, don't wear a mask. Go to a restaurant, don't go to a restaurant. Blah, blah, blah. So it was funny. The boys went, all those in favor of moving to Florida, raise your right hand. So I put my hand up. The boys put their hand up. And Mary Beth just gave me stink eye from the face. Stink eye. She gave me that dirty look.
Oh, man. That's too bad.
So I don't know, man. Well, I will be there. When? I don't know.
When, it might just take time.
My business is just blowing up.
Yeah, and that's so good. Real quick before we transition to the deal of the week, I just want to give a shout out and say hello over to, we got a bunch of people watching today. We got Melissa. Hey, Melissa. Good to have you here. Paul, John, Joel. Remember Joel? Remember Joel Bruff?
Joel Bruff is in the house?
Yeah, Joel Bruff is in the house.
Man, JB, give him a big kiss for me.
Yeah, he's out there. That's great.
Joel Bruff is solid.
And Paul is asking, does Freedom Venture do any raw land real estate projects that are at the end of obtaining project permits? Yeah,
great question, Paul. The answer is no. And it's real simple. Here's why I don't want to touch raw land and new development. It takes too long to get paid. Yeah. The uncertainty in the marketplace is rampant. The mantra at Freedom Venture Investments is buy cash flow. We just made quarterly distributions. Checks went out this week. They got mailed this morning. Yeah. That's for investors who came in with us, 3.5 months ago. So, cash flow is king. Raw land and development is a challenge. Right now, we don't need to absorb any more of the rental market. We're taking that in quite nicely right now. So no, we don't do that because it doesn't pay on time.
Yeah, and Paul, just to answer that on my end, like if depending on your project, because I do have land and I do some development on it, depending on the state, just reach out to me and ping me because we're in a few different projects. So I'd like to see what you're working with there and see what the opportunity is. All right, let's transition into the deal of the week. Let's go over that.
Oh yeah,
we got a nice one here today.
Yeah, I need to be incredibly, not incredibly. I need to be somewhat vague on this one.
Okay.
The reason like I need to be vague on, it's really hush hush.
All right.
We almost contemplated not even putting it on the deal of the week because it's such a unicorn. It really is.
All right.
So look, big picture, 228 units. This is in the Sarasota Bradenton market, where we obviously have a very heavy footprint. Yeah. This came to us off market with an NDA due diligence packet that's about 3 inches thick. I'm not going to get into any of those details because I can't legally do it. But here's where we're at with this one. First of all, we are fairly confident that one of our institutional partners is going to take this down with us. We have not finalized that yet, but just to bring this big picture to the table to show you what's out there.
Right.
This is, like I said, we're going to try and take this down. We haven't finalized negotiations, but we're pretty close. we're being about 43 million, 42.8 million is the takedown on this.
And Dave,
Yeah.
I want to interject here because I want to give people who are watching a good picture of this. I want people just to imagine you're driving down any city that you live in or nearby. Okay, just imagine a big city that you live by, and you see like these big buildings, whether it's a skyscraper or a big commercial, all these apartment units. You know, have you ever driven by one of those properties? You're like, wow, who owns that? And how are you able, it might seem so large and so big, like this deal. When you see the numbers of 42 million, like who does that? Well, this is the kind of project, this is the kind of real estate that you can be a part of, right? That you can play a role in. So that's what we're talking about here. So just imagine if you ever wanted to be in part of kind of those opportunities, this is it right here.
Sure. Look, these opportunities take a team. You know, it's you know, a village to raise a child mentality. It takes a village to buy one of these assets and keep them in the right direction. But yeah, we're in negotiation on it. We're probably around 42.8, maybe 43 million on there. The real magic for us as investors on this one, and you can appreciate it looking at it, is the expense ratio. The expenses on this property are operating off the charts at 60% of income. So income to expense ratio is at 60%. We operate these things at around 35, 39%.
Okay.
Once we get there, these things are humming for us. So if you start looking at the opportunity in spread, we call it, the ability to save expenditure going out.
Right.
You know, it just increases the NOI dramatically. I mean, off the charts dramatically. You know, when we looked at it, it's exorbitant salaries that have pushed that expense ratio off the charts.
Okay.
So it's just screaming for an operation like ours to come in and take them down. So that's what's exciting about it. But again, I can't go into any more details on it as to why, blah, blah, blah. But just know that this is a unicorn. This is one of those ones. And the challenge with this is, you know, most of the amateur operators out there, they don't even stand a chance. I mean, we're gonna commit anywhere between 5 and 10 million just in the due diligence period on an asset like this. So, you know, that takes relationships, that takes work, that takes courage, right? Let us put the courage in there going forward, and we'll invest alongside our investors or our equity partners on this, depending on, you know, how we structure it. But anyway, the numbers are very sexy, as you can see. You know, targeted cash on cash, big picture on it is about 10 and 3/4. As we hold this thing for a 5-year period, we might do an early exit on this. We haven't quite figured it out yet. But anyway, if we do our standard fund procedure on this, you know, you're looking at about a 16.5% targeted cash on cash year 5 and 6. Okay. But the real value on it is the equity multiple. For every $1 that goes in, we anticipate giving back an additional $1.80 to our investors. That's how you get the 2.8x multiple, equity multiple on there. And then the internal rate of return, we say it every week, is the value of an investor's capital working over that 5-year period of time is around 29, almost 30%. So if you can show me a stock market return that can do that for you, you know, I'll go buy some Bitcoin and some Tesla. Anyway, that's the deal that's you know, is taking up a lot of our time right now. We are closing on 8 properties in a couple of weeks. We're just finalizing the paperwork on that. And then we're also taking down an 81 unit syndicated deal, which we plan on closing on by the end of February. If anyone's listening, if anyone's interested in partnering up with us, hey, Matt Canterbury, how are you, buddy? No, I can see your question, Matt. There's no deferred maintenance on this bigger unit. This was built in 2019, I believe. So no, 2018. So it doesn't have deferred maintenance. It's just got horrific operations attached to it. But we're also doing an 81 unit takedown. We're scheduled to close on that by the end of February. That deal will be a $2.5 million equity raise with our investors. That's targeted out for a 2-year exit. Again, double digits. Also sharing in the equity on the backside, sharing in the cash flow. So that's a sweet little deal. That 2.5 that we raise will buy us anywhere between, well, it'll buy us about 6 million in valuation on that particular one because we're buying it so strong. So
Yeah, well,
we're busy, brother. We're busy.
and you brought up a great point earlier about, the returns, the projected returns, and that's something really important. What people don't realize is, there's a lot of hype in the stock market, but if you average out your returns or you look at your IRA statements, show me something that's over 6%. Show me something that's on average over 5%. I'd love to take a look at it because on average they're 4.5, 4.8, and if it's higher, then great. But you're looking at something that has a solid return year over year with this kind of investment.
I was talking with I think we shared this last week. I was talking with a certified financial planner down the hall from me here, and we grabbed a cup of coffee and had a little kibitz. And he was saying that the average investor over a longer period of time, the stock market might historically return 7, 8, 9, 10%, whatever numbers they put out there.
Yeah.
He said, but the average investor only gets about 2.5 or 3%. And the reason is they play the knee-jerk reaction game.
Yeah, exactly.
They put it in, they take it out, in and out, in and out, in and out. And every time they do that, you and I know, fees are incurred against their capital.
Exactly.
And at the same time, they're missing long-term appreciation. So with us, the capital is in, baby. It's working. And Daddy even got the money and he's working it.
And even if the transaction here with an apartment complex, right? Even if it's a 5-year or a 6-year term, you can just play that all over again, right? You can just keep on, I call it recycling. So you can just keep on recycling the funds and keep gaining that interest, which is, much higher than the market. Most people, Dave, let's talk about why isn't this talked about on, CNN, Fox Business? Why isn't this popular?
I don't know, man. I've been trying to figure that out for the past 12 years. Look, it's he or she who screams the loudest gets the most attention.
Oh, right? That's a good point. Yeah.
So it's true, right? Who makes the most noise? Well, the noise is made because, my dad did it this way. My uncle does it this way. My brother does it this way. My aunt, my sister, my grandma. Right. Everybody's been doing the same shite the same way over and over again. So it's like there is such a small percentage of the world that even understands that these investments are available. Like if you say to somebody, what's real estate investing? They'll say it's HGTV. Well, that's bullshit. Right. That's not true either, right? Yeah. This is mature investing for accredited investors. And, the financial world doesn't put it out there. And I think we touched on this last week for probably three reasons. Number one, the financial world doesn't get paid on it, right?
Right.
The financial world gets paid on the fees that they have attached to the structures that they have. Real estate usually doesn't offer that to them. There could be exceptions. Number two is the fiduciary responsibility that the financial institutions are handcuffed by. Like everybody's so scared of the bandits that are out there. Your Bernie Madoff scenarios.
Right.
So they're fearful. They're absolutely riddled with fear in putting these investments in front of them. And thirdly, and I mean this with respect, they don't know anything about it.
That's true.
Go to your. Here's
it's a little bit more complicated.
Hold on, Nathan. This is important. Go to your financial advisor, Mr. and Mrs. Listener, and ask them to show you a 7 to 10 cap investment in commercial real estate. And you know what they'll do? They'll look at you and they'll get that glazed over look in their eyes because they have no idea what you're talking about. No idea. So, those are challenges. So I think that's it, man. I mean, I got a pretty loud voice, but I can't scream at the whole world and bring them aboard, you know, just the intelligent ones.
I think you bring up a good point, though. It really comes down to, there's a lot of, I won't say jobs, but brokers, right? There's a lot of brokers that are involved in that arena of selling stocks or, mutual funds or whatever it may be. It's a big thing. Another question that's come up, Dave, is, a lot of people are like speculating over 2021 and, the housing supply. There's, because of COVID, we got a variety of things going on with the not only the market, but what's going on with people being downsized or relocating and changing locations, right? So what's your take on what does the housing supply look like for this next year?
I know you pulled up some data earlier. Why don't you work off of that? I'm going to tee you up on this one.
Okay.
I've got my own opinion on it, but I'd like to see what you're seeing, what you've researched, what got you going for a topic of conversation on this in the first place. Like, I know that this nation will be a nation of renters and asset owners in the next 10 years. That's what's going to happen.
Yeah.
There'll be those of us who own assets and then people who rent properties.
Yeah.
But I'd be interested to see what you got for data.
Yeah, so when I was doing some of this research, and I guess it's not really current research for me, but it's something that has been on my mind because we're turning a new leaf, right? We're turning a new year, okay, whatever, but we're turning a new political leaf, right? So we got a new president in office, or soon to be, and
maybe.
Yeah. Don't do that. Don't do that.
Oh,
this was
crazy. Man.
This was
crazy.
This was
if you're on the far left or you're on the far right, go home, sit down. You can't play in this game. Stupid.
Oh no. Yeah, so I'm
embarrassed.
It's crazy. I mean, there's a lot of craziness on both sides, right? On both sides, there's a lot of uniqueness going on, and that probably makes more of an impact to you. I mean, you're an immigrant from England. Coming to see that is something what? You're not an immigrant?
What do you mean? Let me tell you something. The English have got their challenges too, my friend. Like,
you can't. Excuse me. You can't call an Englishman an immigrant. That's the truth, because they get offended. They're like, we started this country. What are you talking about?
You gotta remember, the sun never went down on the British Empire, brother.
It's called New England. It's called New England for a reason.
No, look, man, it's universal. It's universal chaos. It's not. America hasn't pigeonholed stupidity. You know what I mean? Like they're not the only ones who put a flag in it. Yeah. It just seems to be what's in the limelight right now because of the wonky donkeys in the mass media. All they do is talk far left and far right. They forget that there's a middle. There's like the majority of this nation is not an idiot.
Right.
Unfortunately, we focus all our attention on the idiots.
Yeah.
Why are we talking politics?
Okay, sorry. We went there. We were talking about housing shortages.
No, you took me there.
I did.
It's
I took
your fault.
I apologize. So back to the topic. I don't think there will be a housing shortage. I agree with you. I think what we see coming is the renter economy, right? So whether it's millennials or zillennials, it's going to be on demand, want it now, travel. Okay, regardless of COVID, let's take COVID out of the picture. So there's going to be a lot of travel coming up and a lot of renting going on, a lot of renting. So it's in favor of the asset owners who own the real estate. Sure. This is why we're seeing an increase in Airbnb, right? They just opened up their they just launched their IPO. Now I'm forgetting, of course, now that I want it. But there's a lot of movement in that area where people, I think, remote work, and it's going to move a lot of people into the rental space. That's what I see happening. Paul is saying, I believe that the 2021 turning the new leaf shortage focus on housing will be much more aggressive on the middle or moderate income housing with more renting than buying.
Yeah, agreed, Paul. I'm with you, brother. Absolutely. We've been hearing about the shrinking of the middle class now for 4, 6, 8, 10 years, if you think about it. Mm-hmm. And COVID has just accelerated that whole concept of haves and have-nots. And we're all blessed with the ability to make decisions independent of outside circumstances. It's just a case of deciding which side of the equation you're going to be on 3-5 years from now. I know we're exiting out of a fund 3 to 5 years from now with an incredible upside to it, right? Whereas a lot of people have just put their head down in the sand. And I'm not going to beat that up anymore, but I'm with you, Paul. What you do now is absolutely going to affect your 3-5 year plan, your legacy plan. It's just, I don't know, man. It's just right. Again, who makes the most noise? That's really what it's all about.
Yeah, that's true. And I think this is again going back to what you mentioned earlier about Florida. I think there's a lot of people, especially now with the new administration, increase of taxes that's being proclaimed, and I think this is going to cause a lot of people to shift and move. We're seeing a lot of people already talking about shifting and moving from the north to the south, and that just creates more rental demand, more rental demand, with people, shifting. It could be for a long period of time, could be a short period of time, but either way you look at it, it's even that alone is causing people to get in a rental position to see, hey, am I going to like this place? Am I going to stay here long term? But anyway you cut the pie, we're seeing, of course you're going to know this, but we're seeing in like North Carolina, South Carolina, we're seeing people on a rental waiting list for 8 months to a year already. There's not enough supply in the marketplace for renters in those markets. So I just see that continually going up and up from here.
Here's what's important to clarify that. It's all geographic. If you want to go rent something in Boston right now, you got plenty of choices. You want to go rent in New York City, plenty of choices. True. San Francisco, Los Angeles. Yeah. You got plenty of choices. Guess what? You come where we are in our secondary and tertiary markets outside of those metropolises. Yeah. You're going to be on a waiting list to get one of my apartments because they're beautiful. Yeah. Right? That's very true. They're professionally managed. That's right. That's the difference. That is the difference. For sure. Yeah. What a good call this week, dude. You got me all jacked up. I was kind of dragging ass at the beginning. Now I want to keep going. I want to. Yeah. well, actually, that's all we have for today. Oh, okay. Thank you. What a tease, man. What a tease.
But for anyone who's looking for a good pick-me-up and a real good time, you can join us next week, same time, same place here on the Cash Flow Show with Dave Seymour and Nathan Amaral. Good to have you here, Dave.
I got a phone number.
Oh, you got a phone number? Wait, stop everything. Dave's got a phone number.
781-922-4418.
Okay.
I'll be on the end of that phone call. If you call that number and say, I want to talk to Dave about the fund and investing and what's going on, I'm an accredited investor. I'm sick and tired of the crappy returns and the volatility I've been getting. I wake up at night because my retirement is not going to get me where I want to go. Call me or reach out to us at freedomventure.com.
All right. Thank you, everyone, for joining in. Thanks for Dave. Say that number one more time because I couldn't even get it.
781-922-4418.
Awesome. See you guys next week.